So one thing to note is that the company has launched several new models as they've done over the previous several years. This has been one of the more innovative EV brands, launching several new models, even launching new brands under the NIO brand overall. So there's some new models, the E36, the ES6, ET5, all of them started in late May, and they've just started deliveries of this model. They're going to start full delivery for the first full month is going to be in June. And as you can see from the MSRP, there's no major changes of these selling prices just before the launch. They did offer some incentives to clean up the inventory of older models, and they're increasing the selling price around 10% from last generation to this generation, which is a welcome sign to see a price increase in the EV industry in China, which is experiencing intense price wars. So it's nice to see NIO is pricing this product at 10% above the previous generation. So for the NIO brand, the company is forecasting around 20% year-over-year growth from last year's Q4, which was around 20,000 units a month. So they are expecting a nice increase for the NIO brand, which is good for the company's overall revenue because these are the highest priced models they will be selling. The NIO brand will be the premium brand, and then the Envo and the Firefly brand will be the lower priced brands from NIO. And given that it's a more mature brand with higher selling prices, it's also going to achieve the highest margins. The management team is forecasting that they will improve their vehicle gross margin significantly for the NIO brand to be above 20% in the fourth quarter. Now, just to give you a perspective of the company's overall vehicle margin, that was just 10.2% in the first quarter of 2025. So they are forecasting the NIO brand specifically will be more than twice the level of the company's overall vehicle margin. Now, the reason I say I don't know how likely that is to be achieved is because if you look at the company's recently reported quarterly financial statement, I have highlighted in the green there the SG&A expense, and you can see if you divide that by their revenue. So let's look at March 31st, 2024, about 3 billion RMB in SG&A expense. Total revenue was less than 10 billion. So that was about a 30% SG&A to revenue ratio. You look at December 31, 2024, about 5 billion in SG&A expense on revenue of about 20 billion. So that's about 25% SG&A to revenue ratio.
Click the link below to watch the full video.